Welcome back. Jitendra Gohil is now joining us. He's Chief Investment Strategist at Kotak Alternate Managers. Markets, as Nigel pointed out, recovering from the day's low. And we are at about almost 25,100. Jitendra, welcome to the program. Thanks for joining us. Last you were on the program, Jitendra, you were talking about low-cost housing as an idea. Jitendra, because financials broadly is still one pick because RBI is wants to spur growth, kickstart another credit cycle, etc. Lots of NBFCs have done quite well, beaten down NBFCs have done quite well. Housing finance and low-cost housing finance, not so much. First of all, are you talking about real estate companies or finance companies in this segment, low-cost housing?
Yeah, hi. Thank you for inviting me on your show. See, what we think about low-cost housing, first is the valuation is reasonable as of now. And what we feel is that the interest rates are going to fall further in India. And most of these NBFCs are in a much, much better place. Even some of these small finance banks who are catering to low-cost housing, probably there the growth rate is going to remain robust. And that's what we feel that the segment is looking attractive from a 2 to 3 year perspective. Also, we have to understand the rural recovery, right? So, although the sowing season has been pretty good so far, 16% YOY growth, monsoon has been pretty solid. So, from interest rates perspective, from rural recovery perspective, and we are also bullish on tier 2, tier 3 cities, the kind of growth that these cities are experiencing. So, overall, if I see the landscape, I feel that from a financial market, we are overall bullish. And within the financials, we think that the NBFCs and small finance banks, which are catering to the low-cost housing space, will do much better in the next 2 to 3 years.
Jitendra, what have you been adding to your portfolio right now?
Unfortunately, we cannot disclose the names, but from a sector perspective, I think all these leading, good quality small finance banks and NBFCs that we are looking at to add.
Okay. Other than that, in this bucket in the financial space, anything else that you all have been liking of late?
Yeah, so we continue to like entire financial space. We are overweight currently. So mostly some of the mid-tier banks that we discussed last time as well, that we like mid-tier banks, we like housing finance, small finance banks. And also, we have to look at the liability and the the loan franchise. For example, the banks and NBFCs where their lending is mostly fixed rate based, while the borrowings are floating. So I think those kind of banks and NBFCs we prefer at this point of time. And we feel that interest rates are going to fall further. They are going to come out with a capital raise also. So the health of the banking system is very, very strong. So we think that this is a very sweet spot right now we are sitting on, where we think the loan growth has been pretty volatile, but it's been slowing down. From going forward in the second half, we think there could be a good chance that we see some pickup in loan growth, because CRR cut will start from September onwards and interest rate will fall further. So all these triggers are giving us very confident view on the sector.
Okay, all right. Hi, Jitendra. Good to see you. When tech, that seems to be in a bit of a tizzy. We had TCS's numbers that came out and they're very uninspiring. So we need to keep in mind that the global backdrop itself is very uncertain. And some of these are very, very well-run, good quality, clean balance sheet companies that could throw up a lot of cash. And, then the cash flow as a percentage of the market cap looks very, very good. What's your view on it? Some of these stocks, case in point being a TCS, has pulled back 20% from the recent peak. How are you positioned on tech? What do you like, large caps or the mid cap names?
Nigel, see, here we are a little bit cautious, and clearly we are mentioning that we like pharma or IT in the defensive space. Large cap IT, I think balance sheet is strong, margin profile is very good, but valuation obviously is stretched, and we think that there is ample opportunity outside this tech space. Some of the mid cap IT companies which have been beaten down, from a value perspective, we are buying a bit, but overall sector-wise, we think that one should remain a little bit underweight here, especially on the large cap IT names. Some exposure is warranted. Obviously, these companies are bellwethers and once the global economy starts to recover, and large part of the slowdown is already priced in. So it's not that we are experiencing a very sharp correction or anything, but we think that the sector might go in consolidation, probably might underperform the Nifty because banking overweight, underweight on IT, that's the call that we are taking from a house view perspective.
Point taken, Jitendra. We'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. We'll take a quick commercial break here. We'll come back and get you, some more opinion. Short-term trading ideas coming up as well. What to buy or sell today for a reverse trade tomorrow. Stay with us.